Good day, guys. Arbin Tulane here, aka Bruce. I'm going to just continue with what we had started in the last lesson, and that's using the trading platform, right? In the last video which we did, we actually took these trades, right? These trades here. And what you must have seen is those trades started on a loss, right? They were red. But can you see now they're in profit, right? So that initial loss which you saw, that's the money that the broker makes, right? The broker is the person you register with in Forex, the person you give your money, you deposit your money with. Remember, we said this is a demo. You still need to open a real account and put real money once you are confident with the demo. So those guys, what they will do is they make money from that initial money that you make every time you open a trade, right? So now, can you see they're in profit? So if they're in profit, remember we said buy, meaning we selected that price is gonna go up, right? So if they're in profit, it means that right now, if we said we're gonna buy from here, then price has moved above. We said it's gonna go up, and then it has actually went up from where we said it was gonna go from. And you can see it. Let me just go down to a smaller time frame. It's slightly above. Okay, now it's going back. So if it, you can see now it's going back. So if I go there now, you'll see that it's on a loss because price hasn't went above, and I said it's supposed to go up. So if I click here in the center, you can see those two Euro USD trades are on a loss, right? But if I go to this one, see how I'm doing it? I simply swipe left, right? And then I come here, this thing that looks like a chart. I click on it, and then here I am. So can you see this here represents the current price? And can you see it's above from this line, this dotted line here, this green dotted line which says buy. This is the line that shows that's where I bought. And from where I bought, the current price now is above there. Hence, I am now making money. Can you see that? I am making money. So if price actually goes below here, if price comes to the bottom, then you'll see that it is on a loss, right? So what you'll also see is, let me just go to a smaller time frame so you can see. As this thing goes up in my direction, the more money I am making. Can you see last time it was on $6 if you saw, but now it's on 8. So the more this thing goes higher and higher in my direction, the more money I make. And then as it comes lower, the less money I make. I'm still gonna show you what these things mean here. But there's what we call candlesticks. We call them candlesticks, and I'll explain to you what they basically mean. But here I was just showing you what's happening here. And can you see we've got this red line here and this blue one here. And they have what we call a gap. There's a gap in between, right? And this gap, we call it a spread. So this spread is actually what determines the initial money, that initial loss which you see when we open a trade. With the one I said, it goes to the broker. That's how much they charge you. Meaning the bigger this gap is, the more money the broker makes. When this gap is small, the less money they make. So for you to, if I say I'm buying, you only start making money once this blue. If I say I'm buying from here, it will open a trade here on the red. But it will only start being in profit once this blue one goes above, because I said I'm buying. So everything, this initial loss is the money the broker makes. But do not concern yourself with that for now. Can you see it's going down? When it was up here, the profit was $8, right? So if we go now, you'll see that it is below $8. As you can see, it is now on $7. Why is it on $7? It's because the price is going down now. Can you see that? So when it goes down, this will reduce, but as it goes up, it will go up, right? So when I tap here, look at what happens. It will show you the date and the time when you opened that trade. So now, how do I close this thing? How do I take my profit? It's simple. You simply swipe left and then you click here. Then I'm just going to click there. When you click here, it will ask you if you want to close, and your current profit will be that. If it was a loss, it will say close on a loss of what, and it will say it will be red. So to close, I just have to click on close, but let me close one of these since I opened two. So I'll just comment, swipe left, and remember this guy here. Swipe left, this guy here, and then I'm going to click on close with a loss, then close. And then it will say closed. Let's just wait for it. It's still in the queue, but it's not supposed to take longer. It takes a second. This must just be a network thing, but they're closed. So now what I'm going to do is I will come here. So this here is where I see my history. It shows me, it's like a statement, it's like a bank statement. It shows you where your money went. This money here, as you can see, this is balance, right? That's how much money you have. Equity is how much money will you have if you close these running trades. So equity will always be less than the balance if you are losing, or it will be more than the balance if you are winning. And then don't concern yourself with this for now. But margin, basically, if you don't have a margin or if it's negative, it's simply telling you that you can't open new trades. You do not have enough money, right? But don't concern yourself with that for now. It's something you'll get with time. But let's just go to the history so that we can see our trading history, our bank statement, right? So I'll just click there. And remember, so there's the current profit which we have made. It's a loss of $1.9. We had deposited $100,000. And because of that minor loss, this is the current balance, right? So, and that trade which resulted in that loss was Euro USD. It was actually opened at this price and it was closed when price was here. As you can see, it was opened at 4. It was opened at 4 and then closed at this 3 here. This way it was closed. So you know from 4 to 3, price went down, right? And buy, remember I said buy is saying price is supposed to go up. So price actually went against us, hence it closes on a loss. Do you understand that? I trust you got that. It's quite easy, right? Yes, I know, too easy. So now I will go to the charts. To go to the charts, I'll click here. Can you see that? You click there. And then once you are here, I'm just going to change this. This is what we call a time frame, right? I will explain to you what a time frame means. But basically, a time frame is basically saying to you, this candlestick, what period in the past minutes, or when should this one close? Do you want it to close after 1 minute or after? There are different times, right? As you can see them here. It starts at 1 minute, then you have 5 minutes, 15 minutes, 30 minutes, 1 hour, 4 hours, daily, weekly, monthly. And all it says to you is if I go to H4, it's basically saying to me that each candlestick, remember I said these things are called candlesticks, each candlestick represents what happened in that hour. And if you want to see what hour that was, you can just come here at the top and then you can see here. But you don't have to know what hour that was, right? But I simply clicked here, then it gave me this thing here. That's how I was able to see that, right? But you don't have to concern yourself with that. So now these things we call candlesticks. And if you check this thing, it has what we call an open, a close, and tails, right? So if you see these things, they are often something like this, right? So we have two different candlesticks, right? So this one, green is good, right? So this one in my case will represent going up, and then the red one will represent going down. The red one, we call it a bearish, like a bear, right? A bearish candle. And then the green one, we call it a bullish candle, right? So let me just draw those again. This is a bullish, right? Bullish is when price is going up. Like here, when price has been going up, we say the market was bullish, right? Here, when price was going down, we say the market was bearish, right? So here we have a bearish candle, right? Bearish and bullish, right? So these things, guys, if you check, it has this here, and we call this wicks, right? Or tails, right? And this here, we say is where it opened, and this here is where it closed. I understand you are still confused, but don't worry, I'll explain. And this is where it opened, and this is where it closed. So closed, open. Look at the difference between the two. This red one, which is bearish, which means price went down. This one means price went up. How am I seeing that? Well, this one opened here when it started, and then when it closed, price was here. Whereas this one, when it started, price was here, and then when it closed, price was there. What do I mean by when it started, opening and closing? Remember, I said a time frame, right? It represents how long this candlestick will take or took, right? So meaning 1 hour will mean that when an hour starts, a bullish candlestick will open here. And then anything, maybe at some point it managed to go down. But then by the time price closed, it was here. But between that 1 hour, you find that at some point it was up there. So where price had managed to get to before the hour ended, it would then be represented by the wicks. But where it closes, that's where it will be. So in that 1 hour, price went up. So if in a specific hour price goes down, what you will see is when it starts at the open. Here we are. At some point, price goes up. At some point, it goes all the way down. But by the time that hour ends, we are here. So then this becomes the close, and price started here and then went down. So we call this a bearish candle. And this one is, remember, a bullish candle. Can you see that? So if I change the time frame, to change, I simply tap, guys. I simply tap, and then this thing will pop up, and then I'll just select daily. So I'll select daily, and then now what we see is each candlestick here represents a day. It's basically telling you that, look, price when the day started was here. At some point, it went up, as you can see, by that week, but by the time it closed, price was there. But at some point, price had gone below. So the weeks, these tails simply just show you that at some point, price had come here, but by the time it closed, price was here. You can see here, this thing actually opened here and closed almost where it opened, right? But during the day, price was not just in one place. At some point, it had managed to come here, and at some point, it had managed to come here. But by the end of the day, it was back to almost where it started. So that's what we call candlesticks. So this represents maybe day 1, day 2, day 3, day 4, day 5, day 6, day 7, day 8, day 9, like that. Each candlestick represents a day. Here it's a day because the time frame we are in is daily. Can you see that? If I switch to weekly, each candlestick will represent a week. Can you see that? This would be week 1, week 2, week 3. Can you see that? And so forth. So let's see how our trades are doing. To see that, we come here and we click that, and we see, hey, it seems like we have a magic touch. We tend to play around profits, but yes, what can we say? We are here for the profits, right? But losses are also part of the game. As you can see, I closed this on a loss, but what's more important is to make more money than losses, right? So now, see you on the next video.